YouTube, we are back with another lesson. It is officially another Money Monday, so y'all know what that means. I'm about to go through some market analysis, go through some personal trades I'm in, go through my software, see what the market's looking like, go through some potential news coming out that's going to affect the markets. And yeah, man, it's just another day in the office. So without further ado, let's get into this Money Monday, man. Man, your boy just woke up like 5:30. I had to get to it. We tired, but we going though. Okay, let's get it. So, first trade, we are in. Been holding this position for a few weeks now. This is Aussie CAD. As y'all can see, I'm in drawdown. We've been making lower highs and lower lows. The trade has fully went against me. And since this trade is going against me, I need one of two things to happen so I can start scaling into this trade more and lowering my average costs. I would either need to see a break above this trend line, retest back to the upside. I would need to see that structure change. If I see that structure change, that gives me confirmation that okay, this little downtrend that we just had might be over. Let me start scaling back in. Or what I need is it makes a new low, right? But with that new low, we have some weak Canadian news coming in or some hot Australian news coming in. So it can give me a fundamental bias for the reversal I'm looking for. And if we go to forexfactory.com, because this is the platform I use on YouTube, we can see that we have a few events coming in this week. We got Australian GDP. So if this can come in hot, I'm gonna look to scale in. GDP, that's strong news right there. So we can get that better than expected, I will scale in. And we also can see Canada's expected to drop rates this week. They're expected to drop rates this week, and it's not good for the currency. Whenever you see a country lowering rates, that means the currency is likely to weaken. Whenever you see a country hiking rates, that means a currency is likely to strengthen. The stronger the economy, the higher the rates. The weaker the economy, the lower the rates. If an economy is weakening, they will lower rates so more people can borrow money so they can stimulate the economy, because the economy is not doing good. And Canada's economy has not been doing good. So that could give me some confirmation in this Aussie CAD buy. It could help me. And we also have some employment change coming for the Canadian dollar, and we have an unemployment rate coming out for a Canadian dollar. So we will see how this Canadian dollar news looks this week, and it will determine how I'm going to scale in to my Australian dollar, Canadian dollar trade. So I'm not too worried about this pair. Let it go against me. I didn't risk a lot. We can go to my journal here. If I go to my journal, you guys can see I'm $659 in a loss right now. It's no big deal. I've been in much worse drawdown than that. Next up, we have Euro Aussie. Euro Aussie. This is a trade I'm also in a sell in because I am weak on the euro. Euro has been terrible lately. So I'm gonna go to my software right now, right? And here, I'm gonna remove my face. So on my software, if I go to my economic heat map, to my economic surprise meter, this is basically a meter telling me which currencies are stronger or weaker relative to the economic forecast. And we can see the euro is at a 17%. It's at a 17% because all the news that has been coming out has been weaker relative to the forecast, which is signaling a weaker economy, which means I do not like the euro. I want to short this. I want to short the euro. And right now we can see Australian is still stronger than expected. It still has that strong indication that it's been doing better relative to the forecast. So that's why I was in Euro Aussie sales. This is a big indicator that I use when it comes to picking up my trades, because it's hard to, when you're looking at all this news, it's kind of hard to see which one is stronger and weaker when there's so many mixes of news, good news, bad news, good news, bad news. So this just gives me an overall outlook on which currencies to look at for strength or weaknesses. And even here, when I go to my COT data report, I know last week the euro was really weak. This is the net positioning for all the currencies that the institutions are holding. It is legally required for institutions to report this to the CTFC, what they're buying and what they're selling. It shows their latest change in contracts in the past week, all the way up to Tuesday. So it's a couple of days behind, but that's okay. It still gives us a good indicator of what's going on. And we can see last week they got rid of a lot of shorts on the euro, but the week before they added a lot of shorts on the euro. So it's constantly changing, but it gives me an idea of what to look for because I can see what they're buying, what they're shorting. Australian dollar, we see they added some shorts. They added a small amount of longs relative to the shorts. So that's something I got to keep an eye on. Canadian dollar, once again, they took away more longs, but they also took away some shorts. New Zealand dollar, they took away more longs than shorts. And then the Swiss franc, they took away a lot of buys without really taking away much shorts. Now let's go back to the charts. So yeah, Euro Aussie, I was expecting weakness, still am expecting weakness. So what I'm looking for is break below the trend line, retest to the downside, so I can potentially scale in even more and take this to this low right here. Or what I'm looking for is a push to the upside. Depending on what everything looks like economically, I will add entries in this zone and take it down. And that's it. I wish I can tell you it's more complicated than this, but this is literally all it is, man. Just controlling risk, keeping it simple, and watching economic data. That's just how simple it is. I wish it could be more complicated, but it's really not. The complicated part is how you manage yourself in your mind when you're in these positions. So although I'm telling you guys when I'm in, it's obviously easier said than done when you're actually in that situation. How are you gonna feel when a market goes 300 pips against you? You might not feel so good. So it's simple, but it's not easy. Always keep that in mind, man. And now let's go to my journal. I'm down $432 in this pair. Man, I'm in drawdown on all my, man, what? Should I retire? I'm gonna have to retire from trading, man. I'm in drawdown on everything. I'm down 432 bucks on Euro Aussie. Next, Euro CAD. Okay, so I am in Euro CAD, but this was a hedge because I'm in Aussie CAD buys. So I'm going to take advantage of the Canadian strength because we've seen strong GDP numbers last week. So I want to take advantage of it. So if all the pairs that's going against the Canadian dollar push down, I will be able to capture that strength on one pair and close out some profits, while I can either hedge out of this position slightly or I can just hold it. I can just hold it until we get that reversal and then just hold this trade to the upside while I'm still closing profits or taking advantage of that Canadian strength on the other side. That's the cool thing about this game, man. When you control your risk, when you trade simple, I can trade pairs with each other, against each other, with each other. It really doesn't matter. As long as I'm making money and closing out profits on the other end. That's all that matters. I just want you to understand that. Next, we have New Zealand USD. This trade right here, I actually entered again after I closed it. I closed it at first, but then I entered again because I didn't really like the way US dollar was looking. In New Zealand, if we go on my edge finder, we can see that New Zealand is still strong. 88% on the New Zealand, and US dollar is still not too weak, but it's right in the middle. And now when I just combine technicals, I can see what's going on, man. Look at the trend line. higher lows, higher highs, higher lows, higher highs, higher lows. And now all I'm looking to do is take this to a new high and I'm gonna close out profits. I entered with even a smaller position than before because I was already skeptical at first, but it was looking good and I'm not gonna be afraid to pull the trigger. So I just risked smaller. So if we go into my journal, you guys can see I am up 177 now. I was up like 260, so that dropped a little bit. I'm up 177, no big deal. So I'm looking to close this out for what? Probably like $400. That's a decent trade. You know, I'm not complaining. Now next up, we have Swiss Yen, the ultimate demon. I don't really care to show this trade that much because I already know I'm going to hold this trade for a minute. I've held this trade since March 30th. This isn't even like more of a trade. Like I said this in the previous video, but I don't even consider myself a trader anymore. I consider myself a short-term currency investor, and I know I'm going to hold this trade for potentially another month. I'm just looking, watching economic data, keeping an eye on it. I got risk control, and depending on how technicals look combined with fundamentals, I will continue to scale in and eventually close this out for probably a profit. I'm not gonna close this at break even. I've been holding this trade for like 2 months now, so now I gotta get my revenge. I gotta get my get back now. So that means no matter what happens, I'm looking to close this trade in a profit because it got me mad. And when it gets me mad, I'm gonna make sure I close a profit. Next, New Zealand Yen. So New Zealand Yen was a hedge trade because I want to take advantage of the yen weakness. But as of right now, the yen is getting strong. When we go to the edge finder, we can see the Japanese yen is at a 60%. It's been beating economic forecasts. So matter of fact, let's go to our Japanese economic heat map. So what we can see is retail sales recently just came in better than expected, which is why you got that bullish reading right there. We also can see household spending was better than expected. So that's why you got that bullish indicator. And everything else, like the unemployment rate, still 2.5% neutral. PPI 4.3%, expected to be 4.0 neutral. 3.6%, still 3.6% neutral. So we do have an overall bullish reading on the Japanese yen. So I don't know, I'm definitely going to be eyeing this pair. It's still above my trend line, so that's like my safe zone. So if it does happen to break out of this trend line, I may potentially look to start scaling out with profits from another pair potentially. I'm going to be eyeing it. I could even close it right now for a small, $90 loss, which is not a big deal. That's pretty much a break even for me. I could do that. I'm eyeing it, but I am in Swiss yen. I did want to capture both sides of this yen trade. So we'll see. We will see, man. And in my journal, you guys can see I am $100 in drawdown on New Zealand yen. And I'm also in $60 in drawdown on Euro CAD. I don't think I mentioned that yet. So I am in drawdowns. I'm in plenty of drawdowns. I'm not really worried about it. This is what the market does. It moves up, it moves down, it moves down, it moves up. And I'm gonna close profits on pretty much 90% of these trades. There might be one trade. It's gonna be one of these yen trades for sure. If I don't close a profit, it's gonna be one of these yens. But New Zealand USD is gonna be a profit. Euro CAD is gonna be a profit. Euro Aussie is gonna be a profit. Aussie CAD is going to be a profit. I'm going to profit on all of these trades. I'm 110% confident because if you guys don't know this, the market doesn't control your losses. You do. The market doesn't control your wins. You do. I choose if I want to make money or lose money in the market, not the market. Once you understand that, the whole game changes. The whole game changes. But it's all about that mental framework you have when you're executing on these charts in these markets. So always keep that in mind. You guys see my P&Ls. You guys see I'm negative in a whole bunch of trades. I got nothing to hide because I know this is how the game goes. And it's the same thing on the opposing end. When I'm closing profit after profit after profit, it's not fake. This is what the market does. It puts you in drawdowns, it puts you in profits. It puts you in drawdowns, it puts you in profits. This is the game of trading, which is why the main thing you need to be worried about, the main thing you need to focus on is controlling that risk. Control that risk. Don't lose your money. Don't lose it. Control your risk. But yeah, with all that being said, y'all, man, have a good week in the markets. Control your risk. Be smart. Make good decisions, because that's what the game is about, making good decisions. So be a good decision maker and have a good week, and I'm gonna catch you guys in the next lesson. Let's go.